François Desjardins, who is Laurentian Bank's CEO. François, thank you very much for being with us.
Thank you.
So let's start with that, what must be obviously a very serious and painful decision for a bank to cut the dividend. What led you there?
Well, we have a strong capital and liquidity position and very disciplined credit management. But this is overall a time for prudence. Although we still believe that the current earnings are not reflective of the future earnings, it is an uncertain economic time, and we must go forward with an abundance of caution. So making this move, really what it does is improves our operational flexibility, ensures that we can move forward confidently, aim for the growth that we want, and absorb any credit losses should they arise, and complete what we started, long-awaited strategic objectives.
So on the credit losses, that was really, François, the story this quarter for all of Canada's biggest banks. As we expected, the higher the provisions, the bigger the bite out of profit. That was all anticipated. But paint the picture for us of your specific set-asides. What kind of provisions are you taking, and what are the categories that you're looking at that you're sort of most worried about?
Well, Laurentian has always operated with a very conservative credit practice. So our usual loan losses are about a third of the normal industry's big six banks' loan loss provisions. And what we saw in the quarter is a proportional increase of our loan losses versus the big banks' loan losses. Of course, theirs are much higher than ours because we have a more conservative credit portfolio. We don't have some of the industries that are hurting in our portfolio, like airlines or oil or these types of industries. We concentrate mainly on real estate, residential mortgages, those types of portfolios, which have a lesser degree of loan loss provisioning.
You also have, quite intentionally, and this gets to the strategy that you've been in the middle of for some years now, exposure to that U.S. commercial loan market. What's the picture looking like there, and what's your kind of level of optimism about it?
Well, not all territories are living the pandemic in the same fashion. So what we're seeing out of the U.S. is that sales are continuing in spite of the pandemic. Mostly what we do is inventory finance in the U.S., so we're financing RVs or boats or those types of equipment, and dealers are saying to us that they're continuing to see sales happen. It's maybe a little bit logical as well as U.S. citizens are rethinking where they're going to be putting their leisure dollar going forward. Probably not thinking about having international travel at this point and maybe staying at home a little bit more. So buying RVs, boating or equipment that is more local is probably something that we'll see increased sales, or that what we're hearing will see increased sales. Nonetheless, in the U.S. market, they've lived exactly what we've lived here, is a little bit of disruption on the manufacturing side, getting to parts and materials, but that seems to be resorbing itself a little with a little time.
One of the big questions, and we're asking this even today as we look at that ISM number, still terrible, but kind of bottoming out perhaps, is where we see the worst, where you see the peak in your set-asides, and also then possibly loans that go bad. What's your thinking about that at Laurentian?
Well, this is a very unusual time because normally all of the models that are built with economic forecasts in mind. This is not an economic crisis, it's a health crisis. So the governments have stepped in around the world to provide help for small businesses and for consumers in general. The banks have stepped in to do the same. And of course, this has an end. The pandemic has an end at which we will get to. So normal models do not apply. In the current concept, and you saw that in the second quarter, all banks took appropriate provisions given the economic outlook that we have. And that's the best estimates that we can have on lifetimes of loans going forward. Will we see recovery? Certainly so. And then we can argue about timing and speed. When will consumer confidence come back? I think a lot of consumers are eager to get back out there and are having to hold themselves back a little bit to maintain prudent on the health side. But certainly the enthusiasm seems to be there. It'll still be a while, agreed, but the return to normal will come.
We have seen a lot of government supports offered. Are there any that have helped the bank, first of all, but second of all, that you think are working well to help some of your clients and customers?
I think that, well, Laurentian has not required to use many of the government programs. We have really strong liquidity. So we do have access to all of the programs and are very much in support of what the government has done so far. Even though we have not used many. But we have supported the government's willingness to provide aid for customers to be able to open up accounts and get automatic deposits quickly. We have supported, obviously, with payment deferrals on mortgages, credit cards, and other personal loans. And of course, small business loans we've also participated in and done our fair share. All of these things are very, very important for consumers and businesses to maintain and stay afloat during this pandemic, and will very much ease our recovery once it's over. So it's in everyone's best interest.
So what are you telling investors, François, about your growth strategy as you look through this pandemic? Because you, like many banks, you're different from the others in your own specific ways, and you've got different sort of geographic exposure that could either benefit or hurt you. So what are you saying about what your strategy looks like here?
Well, I think coming out of a year where we took a little bit of a step back on the personal customer side, 2020, when I was looking forward to it, I was very optimistic about our growth prospects. A lot of the stuff that was plaguing us in the past, like labor relations, is far behind us now, and that work is still ongoing. We're seeing some very positive signs in spite of the pandemic on mortgage growth, even though it has not completely stabilized. We're seeing an increased number of apps every day, and we've stabilized the personal consumer portfolio. Or almost so. So these are things that I had said were going to happen, and they are. We're still seeing double-digit growth on an annualized basis on the business services side. Too soon to tell how much that will continue in the last 2 quarters, and we need to be prudent by saying we'll see what we will see. Every day brings a new news element that we need to take into consideration. But here at Laurentian, we are fully open for business. And aiming for growth, and to finish off what we started, which was the heavy lifting of transformation has to come to an end, and with that is economies that will flow down to the bottom line.
All right, and I should ask you before I let you go, François. Obviously, again, painful to cut a dividend. Is that it, or might there be additional thoughts on that front in the future?
In my mind, this was by really an abundance of caution. Right? Thought long and hard about doing it. If it wasn't for COVID, I think that we would have earned our way back to the payout ratio that we had, which is 40 to 50%, and which our target has not changed. I think it's a prudent move to reduce our dividend payout for the moment, continue reinvesting in growth in the company, and see our dividends grow at the pace that earnings are growing. So for the moment, I think that this is the cut that we needed to make. We've done it. I think it's going to be good for the growth of the company, and in the end, good for the shareholders as well.
All right, François, we'll leave it there. We appreciate your time today. François Desjardins is the CEO of Laurentian Bank.